Good morning, everybody. Welcome to Stock Market Today. It's Monday, August 10th, 2020. This is your host, Dan Russo, back in the saddle. I'm the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at @DanRusso_CMT. Good to be back after going about 6 days with no power here. After a storm came through the Long Island area last Tuesday, but we're back at it today on a Monday morning. Thankful to the folks who worked hard to get our power back out there on the streets every day. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show. Also give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities were a little changed on Friday, though the major averages did mark some big weekly gains. On the day, financials and utilities outperformed while tech and discretionary lagged. Treasuries were mostly weaker with the curve steepening. The dollar was stronger on the major crosses, gaining for the week after 6 weekly declines. Gold finished down 2%, but was higher for a 9th consecutive week. WTI crude down 1.7%, but also posted gains on the week. As we get to the desk this morning to kick things off, the futures are up about 20 basis points here to get us going on the new week. Now, a lot of moving parts this week, as we did see over the weekend, President Trump coming out with an executive action on further stimulus as it relates to payroll tax collection, extensions of the eviction moratorium, as well as authorizing states to pay $400 per week in additional unemployment benefits. At the same time, we do have increased tensions between the U.S. and China moving up to the front burner as well. And this is all playing out as earnings season continues, but certainly does begin to wind down. With that as a backdrop, Asian equities were mostly higher overnight, led by Australia. Hong Kong was down on the day. Treasuries are a little changed. European markets are slightly higher. Dollar is stronger against the euro, unchanged against the yen. Gold is up 80 basis points. WTI crude is up 1.6% to kick us off on a Monday morning. That starts with the S&P 500 with the February highs clearly in its sights. Now, remember, this has been our thesis, right? We've said that the base case is as long as we are above support, you're playing for the highs. And that does appear to be playing out. Above the 50-day moving average, above the 200-day moving average, both moving higher. We're bumping support up this week to 3150 to 3250. Below that, psychologically important round number around 3000. Resistance, call it 3350 to 3400 for now. That's unchanged. We're there at the bottom end of that range. Now, we are overbought in the near term, so something to keep in mind. Whether you're using the CCI or if you're using Chaikin Analytics, our near-term overbought, oversold indicators for all three of the major market ETFs, the IWM, the Qs, as well as SPY, are in overbought conditions. So something to keep in mind, right? As you do have some geopolitical issues, maybe some pushback on fiscal, right? These are in your mind. You're thinking about them, but ultimately it's price that dictates, and the trend is higher. Trend remains intact, largely lining up with our views here. Chaikin money flow is strongly bullish, and what's interesting to me here is that we're getting back up near the levels that we saw in February. So some interesting confirmation from a money flow perspective as it relates to what's happening here in the S&P 500. At the index level, we'll take a look at a chart of the Qs a little bit later on in the show. Let's touch on our market in a minute. What are we writing about today? Well, I hit on this originally. Major ETFs are overbought in their respective uptrends, right? Overbought and oversold. I always kind of think of them, where are we in the context of our trend? We like to see oversold as in an uptrend as an opportunity to become more aggressive on the long side, whether you're looking at the market, whether you're looking at individual stocks. Overbought in an uptrend to me is just a sign that maybe you don't want to open a new position, but not a sell signal in my opinion. It's just kind of a state of being. Overbought in an uptrend should be giving you an opportunity to raise your stops and letting the trend go to work for you. Now, gold is extended in a bullish trend. We'll touch on that, and it's actually improving on that extension here today, as the dollar could be poised for a near-term bounce. Now, this started to play out late last week. I wish I had power because I was watching it in the deeply oversold conditions of UUP. If you go back to my note last Monday, we started to talk about it there and saw the potential for a near-term bounce. Now that has begun to play out, but that to me is within the context of a downtrend with UUP below support at the $26 level. Rates remain pinned to the floor, and as I said, stimulus and China will be front and center this week from a headline perspective. So just kind of prepare yourself for that. So we look at the major indices from a power bar perspective. The Dow is bullish at 8 to 5, 8 bullish stocks for 5 bearish stocks after tacking on 26 basis points on Friday. S&P 500 relatively flat on the day, 148 to 82 bulls to bears there. NASDAQ had a tough day. Some profit taking in that area of the market, which has been solid outperformance, 35 to 8 bulls to bears there. And kind of keeping with a trend that we've seen over the past few weeks, maybe even a couple months now, up days, small caps outperforming, 732 to 239 bulls to bears there. Bonds downtick, sending yields higher. Financials had a nice day yesterday, on Friday rather, as the curve steepened. Financials up over 2%, 26 to 12 bulls to bears in the XLF. Let's take a look at our stock of the day now. Echo Global Logistics, ECHO, has a bullish rating in our 20-factor model. Strong trend above the trend line. Strong industry group, air freight and logistics. I just kind of like this setup. Right? Nice base here for the better part of the past 12 months. Topside breakout, pullback, retest, and working higher. Now think about this, getting back to that overbought, oversold. Long-term trend line, prices above it, trend line is rising. Clearly an uptrend. Oversold within the context of an uptrend. Outperforming the market with bullish money flow, you start to check the boxes. The weight of the evidence looks pretty compelling here. Now, whether you use support and resistance to manage your risk or something more volatility based, you can see a clearly defined level here at $24. I think as long as this stock is above $24, it's a compelling long idea. Take a look at ECHO. I'm featuring it here for you today, as well as in my note to Chaikin Analytics clients. Take a look at the sector movement now. Last 5 days, the sector tracker, a little bit of that cyclical feel to it. Industrials, fins, and energy at the top of the list. Comms and tech round out the top 5. Discretionary materials, staples, middle of the road. Utes, healthcare, and REITs at the bottom of the list. So that's a fairly compelling setup if you're bullish on the equity market here, as we are. You have your defense. You have everything moving higher over the past week. Okay, led by your beta and your big cap leaders, right? Comms, tech, and then some of this cyclical rotation, while your defensive areas of the market, staples, Utes, REITs, or towards the bottom of the list. So that's a good board if you're bullish on the market. At least in the short term, that's a nice looking nice looking sector list for the equity bulls out there. Our industry in focus, innovative tech services. Past 6 months, absolute monster, outperforming the S&P 500 by 28%, right? Largely been, tech has largely been our favorite sector. Growth, momentum, right? We've talked about it in numerous different forms, and it's there. So kudos to those who have been following along with that strategic positioning. And the power bar ratio is very strong, and that's a signal of future potential. 24 to 8 bulls to bears there. Currently ranked number 9 of 21 subsectors. Did move down one slot over the past week. Some of the indicative names there: Wuba, WUBA, that's 58.com, Chinese company, very bullish. IOYY, ticker symbol YY, very bullish. And ICHR, ICHR. ICHR is kind of a interesting name within the semiconductor supply chain, with a very bullish rating as well. And if we take a look at the fund, I mean, up and to the right is an uptrend, right? Bullish fund, 24 to 8, strong trend above the trend line. Yeah, issue here is just, remember we talked about it again, overbought within the context of this uptrend. So what does that mean? It means you don't chase it, in my opinion. You wait for it, you wait for the better setup. if you're looking at the ETFs. If you're drilling down on individual names, right, you have 24 names here to choose from, bullish names. Find the right setups. Solidly bullish money flow. I mean, this is just a great trend. It's just extended right now. And that happens sometimes. You get a little extended within the context of your trend. Right? Move your stops up. Manage risk if you have to. And then wait for a better setup to play the existing theme. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers, gainers and losers. Biogen had a BLA accepted. Sent the stock higher 10%. UPS, they plan to charge holiday surcharges for some of their bigger shippers. Investors like that, up 7%. Taking a look at HST, no real news there, up 6%, very bearish, same name. LNC is a bullish stock, nothing company specific, up almost 7%. FDX was named a best idea at Stevens and upgraded today at SC Bernstein. So take a look at FDX. FedEx, loser side of the board. Lumina, down 11% following their earnings report and a slew of downgrades. FLT, bearish stock. They reported earnings on the 6th. That night, follow through on Friday, down 8.5%. Fortinet, didn't see anything company specific there. ATVI, nothing company specific to take that stock lower by 5%. Freeport McMoran, FCX, that's a recent favorite for us. Gets clipped for 4%. And news that the COO is retiring from his slot. Now, let's take a look at the charts. Qs are overbought to start the week. Again, where are we within the context of the trend? So QQQ, we know it. We love it. It has a bullish rating in our ETF model at Chaikin Analytics. New high on Thursday. So this was the consolidation. This was the, oh my gosh, there's this huge rotation out of growth. This was your big rotation out of growth right here. This sideways action for a few weeks. Break topside, become overbought. Clear line in the sand, call it 265 to be a little bit conservative. Above the 50-day moving average, above the 200-day moving average, both of which are rising, okay? Price above rising moving averages, definition of an uptrend. But we're overbought within the context of that uptrend after the topside breakout. Now, Chaikin money flow here, similar to what we saw on the SPY, breaking a downtrend line and moving higher. So, nothing to dislike here at the moment. Simply a function of being overbought, a nice run. Maybe we see a little bit of a pause, but this is how you think about the market. Where are we within the context of the trend, and what does that mean for my actions? Are your stops in place? Should overbought turn into rollover? Are you protected? Do you know where you're getting out? Where does that sit for your individual names, as well as for your ETF positioning? What does it mean for your strategic view? The market will tell you where you should be. We get a lot of questions, how much cash should we hold, right? That's specific, that's highly specific to each individual, but largely the market will tell you where you need to be within the context of your risk profile. So let the market tell you what has to, where you should be positioned. Gold is extended, and we could see a dollar bounce. We touched on this. Here's gold, the continuous commodity, very extended here from the 200-day moving average. As a matter of fact, it is, if you look at a Z-score, it's 2.65, right? Positive 2.65 to the 200-day, the 200-day Z-score. So roughly 2.65 standard deviations above the 200-day moving average, as the dollar looks to be overdone to the downside in the near term. So we get a dollar bounce. It stands to reason we will get some pressure or stalling in the uptrend in gold. Does that mean the uptrend in gold is over? No. Does that mean we're any less bullish on gold? No. It just means, would we chase gold here? No. In fairness, I've said that for a week, and it really wasn't until Friday that played out, but that's the process, and I'm sticking to it. And finally, rates are pinned to the floor. Here's the 10-year. Down under 60 basis points, and take a look at the 30-year, under 1.3%. So rates pinned to the floor. Fed has told you they're not going to let them up. Dollar could bounce here, but largely speaking, precious metals are pointing to inflation. This is our larger, bigger picture thesis. We talk about it constantly. We talk about how we like to be positioned within the context of that thesis. If you're interested, hit us for the 14-day trial, chaikinanalytics.com/test drive. Get my note every day. Happy to be back. See you tomorrow.